Okay, it's Monday evening here in the United States. It is February 18th, 2019. Today was a bank holiday in the United States, and on bank holidays, I generally won't trade. And pretty much for the reason that we're looking at right now on the screen on the charts, it really doesn't move all that far. I mean, every once in a while, we're going to get a bank holiday somewhere, and then there might be some activity right away when the market opens, and it sort of catches the market off guard, or people will react to maybe comments and statements and rumors that were created over the weekend. But that really wasn't the case today. So I'm back on a regular trading schedule. It is the Asian session now, and at this moment, though, I just want to review the 30-minute charts here on the majors. We've got the euro dollar on the top left, pound dollar on the bottom left. Top right is the dollar yen, and then the bottom right is the dollar Swiss. So you can see, for the most part, there really wasn't much of a trending move here on any of them. That's the step number one for an HL30, is to identify some kind of a trend from the previous day, because at that point, when that rollover occurs at 5 o'clock New York time, we're looking for the previous day's high and low and trying to trade a reversal off of that in the direction of the primary trend that we can see on the daily time frame and the 4-hour charts. So the fact that it remained in a relatively tight range for most of these currencies, the currency pairs here that we're looking at, the majors, I'm not expecting to trade any kind of HL30. Now, it doesn't mean that I won't be able to trade some kind of reversal during the London session, during the New York session for Tuesday. Something like that might happen. If it was to create some kind of a reversal, I would be using a different strategy. It really wouldn't be the HL30. It would be something like a Tech 1 trade, something to that effect. But right now, again, I'm not going to be looking for any HL30s. Normally, after the 5 o'clock rollover, I'm going to be setting up the charts. You can see with this dotted line right here a few hours back, looking and identifying for the previous day's high and low because of the rollover period starting into a new day. But then again, rule number one, there has to be some kind of a trending move, and there really wasn't that on Monday because of the tight ranges. So things might change. I mean, Tuesday, Wednesday, Thursday, something like that might generate an opportunity for me to trade an HL30, depending on the activity that we see during the New York and the London session. But right now, again, the conditions aren't optimum for something like this. So I would be looking for the possibility of like a Tech 1 trade, or maybe something that might develop during the New York session, London session or New York session as a result of some economic data or something that might move price around. Sometimes I might have to wait until the reaction afterwards. That's what I did on Friday. So on Friday, we saw some activity, and then I waited for the move and then traded the move after. So if you were watching some of that, it looks something like this. So you get, and this is not Friday, but you get something where you get a move to the downside, and then the whole thing reverses and goes back up the opposite direction. So that could provide an opportunity, trading a reversal, looking at the larger time frames, which is something that I was doing last week a few times. Once price reached significant major support and resistance levels on some of these currencies that I could see and identify on the 4-hour or the daily time frame. And I'll go ahead and go to those daily time frames now, so that way you can see pretty much what I'm talking about, what we've been talking about over the last few weeks. So I'll go to the euro dollar. Now, you'll remember a few weeks ago, we were watching this drop. It went down 4, 5, 6 days in a row here. This is the daily time frame for the euro dollar. And the key support low, in my opinion, was back over here from November 12th, 2018. And that was right around the 1.1213 area, 14 area. And, anywhere in between the resistance and the support levels, price could stop and turn around and go up the opposite direction and retrace a little bit. But in my opinion, and this would be the same thing if I was looking at a 30-minute, a 15-minute, a 1-hour chart, I would much rather wait until price gets really close to, and I can see that price is then creating some of these patterns with these indicators that would indicate that move is stopped. So in other words, if this was, let's say, a 1-hour chart, this would be my range of consolidation. And trying to trade when price looks like this, something like this, about in the middle of that range, in my opinion, is a little more risky, Now, sometimes you can find, key support lows inside of or in the middle of consolidation, and they might provide an opportunity, and other times they won't. So one of the things I'm going to be doing is looking at some of these indicators that are going to help me determine if things are sort of oversold or overbought, those conditions, on a short-term time frame to identify a potential bounce. I'm going to rely mostly to find reversals and things like that. I'm going to rely on the Bollinger Bands and the indicators that John Bollinger recommends using. For example, on the bottom of the bottom two indicators that you see here, we've got percent B and bandwidth. These are two of the indicators that I'm going to be using at almost all times. But again, it doesn't help me to try to pick an area in the middle of consolidation where I think it's going to be riskier to try to trade a bounce. Sometimes it's going to be obvious. Sometimes there could be economic data that could support a reversal, and then it might line up with an obvious mid-range support low or something like that, something like this tweezer here. That could potentially happen. But when it doesn't happen and price just keeps dropping lower and lower and lower, I don't get any of these signals to identify a potential turnaround just yet at that point, along with the economic data. There's nothing really to support it. So at that point, I'm just going to be on hold, and I'm going to wait until it gets really close to these support lows. And then once I see some of these indicators start to identify that it looks like it's probably going to be some kind of a reversal, maybe with some news, that's when I would be feeling a lot more comfortable with jumping in. And then I can minimize the stop. If I jump in the middle of a range like this and it takes out that low, well, who knows how far it's going to go. So that's what I was doing last week with some of the short-term trades during the New York session. And if I go back over here, you can see something that looked very similar to this bounce. It was sort of a similar pattern. And again, using it on a 30-minute or 1-hour time frame, that's going to give me the opportunity to minimize that stop. So again, don't expect any HL30s here during the Asian session because there really isn't any. I'm not going to be trading it that way. If anything, it would be some kind of a reversal or a bounce, and I'll be watching to see how price acts. For example, we're looking at the euro-dollar here, how price is going to act during the London and New York session. So the next update will be sent out about this time on Tuesday.